Hi, welcome to the Market Alert for Thursday, the 14th of September 2017. So yesterday, starting off with the pound, we saw the market move lower on the better than forecast unemployment figures. You'll see here in Zero Hedge, they came out better than forecast. And this sent the pound down because it still looks like the economy is growing. Again, it's all an illusion, as we've talked about many times before. And there you go, you also see from the BBC as well. Unemployment rate falls to 4.3 as wages stagnate. And well, they've done that since 2008. There's only 1% of the population that have seen an improvement in their income, and that is at the top end. But that's another discussion. So we see the pound move lower. And as I said before, the only high impact news items now to really worry about at the time of their release is anything to do with central bankers. All of the other high impact news items appear to not really have any influence, except on Tuesday we saw the RPI figures come out. One time you'd have seen that be really volatile, and now it's not. There's a certain, it's bad news, and the market moves lower or moves higher. And the same with yesterday. There was just the follow through then. Of course, we've got the Brexit talks in the background here as well. Got a bit of a faded rally there, back below the 20-bar average, and the market moving lower as well. And in fact, there's a lot more volatility in the pound yesterday than in the Dow. As you can see from the daily chart, the market struggling with the 132.66 level here at the moment. Prices back below it. News-wise, well, it's been a slow news week, and this is going to continue through. Apart from the interest rate numbers here, the one to watch today is the MPC official rate votes. That's the only one worth looking at there from the UK. It looks like there's 2 to increase and 7 to remain. So it'll be interesting to see what happens there with those figures. And then we've got the official bank rate. Well, that's going to remain unchanged. They daren't increase interest rates because it increases the debt interest on the debt payment as well. Over to the US, we've got claimant counts, usual stuff really for a Thursday. This is the weekly unemployment. CPI, most rigged CPI in the world, the US 0.3. And then we've just got Bubba President Weidman speaks at 4:30 p.m. and that's a medium impact. So everything's out before the market moves once again. Let's have a look at, actually just before I move off there, I forgot about that. Yeah, let's just have a look at the dollar index while we're still talking about currencies. This is the dollar index basket of currencies against the US dollar, and you can see that the US dollar has been in decline since Trump took office. The market's been moved lower there, and again you can see from 2014 under Obama, everything fine. 2015, 2016 elections, and then Trump in, and the Dow moving low. So a crucial area here for the Dow, without a doubt. And at the moment, it's trying to find some support in this area. Meanwhile, in the Dow, let's have a look. Well, it's as boring as you like, and that's because if you look at the implied volatilities, we're down in those 7% areas again, and we know what happened last time we got down to this level. The market just becomes sideways, it's just treading water. 17-point loss there, 16-point loss there, and there's a 22-point loss there. But the clues were there again. We had the failed buy. We got a failed sell there after the first trade as well. You can see there's no range whatsoever within the first 30 minutes. And also in the pre-market session, it was really, really quiet. So we couldn't expect a lot, to be honest. And the same today, as you've seen, we've got hardly any news out. That said, all it needs is something to come out of the blue to spark a move. And again, and the reason I'm saying that is that they want the market back through the highs. They want to get through the 22,178. Keep the illusion alive that everything is fine. Crucial area here to move the market higher. But they need some decent news in order to do it. And at the moment all the news is bad, but they're managing to tread water at these levels. Right, so have a quick look at the implied volatility before concluding. So the implied volatility is again down, but only slightly, down at 764 from 768 for yesterday, but nonetheless still indicating that the market is very quiet at these levels. That's for certain. Okay, that'll do it for today. If there's anything to report, I will let you know, but looking at it, it looks like it's going to be a quiet day across the board, and obviously the volatility is giving us a clue on that at 7.64. That will do it for this one. As ever, thanks for watching. See you in the next one.